We're going to be talking today about congestion in the markets and trading with Boomerang. And before we get started, I want you to make sure you see the disclosure and the disclaimer for the Commodity Futures Trading Commission and understand about futures trading and the risks that are involved, not to use any money that you need for important necessities and to trade just with money you can afford to lose. That way you can sleep at night and have a peaceful life while you're learning to trade. Trading's for wealthy people generally, or people who can afford to come up with $10,000, $20,000, buy systems like Boomerang, spend money for education. Of course, we provide free education along with Boomerang, which is extremely low cost compared to the rest of the industry, and we're the only system in the industry that guarantees 90% winning trades. It's a historical move that I made with Boomerang. We've set the bar so high that I don't think anyone will ever be able to top it. So we're even topping our own bar that we set with recent examples of our audit that we did recently on the last 2 weeks of trading. 98% win ratio on the trade setups. But before I remove this screen here, I just want you to see that was the disclaimer I showed you at the bottom of our homepage. This is the default place to go for all things Boomerang. BoomerangTrader.com. You can come on here and you can go to the resource section. And this webinar will be posted there tonight because it's going to be, like I said, on congestion in the markets was an important topic, how to apply constant lines, all kinds of stuff. Things like about the hyperscalp indicator, trading on e-signal with Boomerang, all these important things. Precision trade guide. I got a lot of great stuff in here. The volume meter. So we're going to add this webinar today on congestion to this section, so you'll always have that. But go to Boomerang for anything. The Boomerang blog for anything you need to know about Boomerang. You can sign up here and get notices when I post anything new, and all you do is go to the blog section and you'll always see those posts there. Here's our notice about rescheduling Wednesday for today, and that's what we're going to get started on right now. So what I want to talk about today is very important. It's called congestion in the markets. Greetings to all of you, by the way, and I've got a good audio and video sound check, most appreciated. That's going to help me a lot, and we're going to get started on this. So now, the first thing is I want you to understand is that Boomerang is I'm going to talk about Boomerang for a second, then I'll go into congestion. We'll kind of ease into it because to just start off with that, a lot of traders are brand new here at our tutorial and they're just learning about Boomerang. Now I do have, I'll show you this again also here. Let's see here if I got that on the resource section. I believe it's, and I probably should put it there. Oh, I know where it is. It's under the 90% winning trades. This is an important video to watch here, and it's called the 2 Boomerang Day Trader Setups for Ending Trades. There's only 2 setups that we use. The first one has a couple of little variables that you need to learn. Just go to this this particular page here. It's under the 90% winning trade section, the 2 Boomerang Day Trader Setups for Ending Trades, and this will help you to understand about that here. And all these, a lot of recordings on the Boomerang YouTube channel, but mostly you can just access those right here off the blog. Watch this video and that'll explain them. I'm going to go over those real quickly right now just so you understand, and then we'll get into the congestion thing. First of all, let's find a classic. Here's one here. Thank goodness. Having a live webinar and I hadn't prepared this at all. Here's the 2 Boomerang setups. Basically, I'm just going to work off this chart section right here. Now, this may not be exact, but I just want you to understand. A Boomerang setups occur primary first level, there's first level and second level Boomerang trades. That's all there is. What happens is when you get one of 3 conditions, either you get a new buy channel. These are called buy channels, and this arrow here marks a sell channel. They're shaded here in the shaded areas, so they're very easy to recognize. When you get nothing happens till you get a new arrow opening up a new buy or sell channel. Once that happens, all you have to do is ask yourself one question. one question that's combined. Are the dynamic trend bands matching the same color? These are called the dynamic trend bands here, this dashed dotted line and this thicker solid line. Now this is also the cobra that runs through here. That's this thinner line, but that line is sort of a front runner of the dynamic trend band, sort of a little measure to let you know when the DTBs are going to start matching color. So the point is, nothing happens until you see a new channel open up with the arrow which is alarmed and marked on the chart, and you ask yourself, are the dynamic trend bands matching color? Have they crossed over each other? Or are they within a point and a half of each other of crossing over? Right in this little spread here. See that 47.50 on the far right of the chart? 47.50, 46.75. That's a point and a half, right? This is based on the mini NASDAQ contract. Probably the nicest and easiest, I think, in the always active contract to trade in the futures. Other contracts are all great. I mean, you can trade Forex pairs, you can trade stocks. You can trade anything that's active with some good volume, and you'll get great boomerang signals. But I'm saying for trading the U.S. stock index, which we tend to talk about all the time here in the Day Traders Action Room and the boomerang trading classes, that's the why I use the NASDAQ here. So you're asking just this: are they matching colors, the dynamic trend bands? It's all based on the dynamic trend bands. You don't have to worry about these bias indicators down here for now. We'll talk about those later. Are the dynamic trend bands matching color, as you see they are here? Are they within a point and a half of each other, which they are right here? Or has there been already a crossover like you see up here? See the dynamic trend bands crossing over? Whether the color's matching or not, if there's a crossover. So that's all you ask. If one of those three conditions is present, all you do is you trade the next pullback to the signal line, which is right here, and it's marked by this blue dot. You go long, you set up your chart over here. I have a little menu of things, but you would set it up for a 20 tick loss and a 12-point gain. That's 3 points on mini NAS is 4 ticks per point, or 4 quarters per point. That's going to $5 per point times 4 is $20 a point, and you're going to set that up for 12.20. And when you go long here, it's going to put a 3-point target in and a 5-point stop. And you don't have to worry that the stop's bigger than the gain, because Boomerang is so accurate. Like I said, we guarantee 90% winning trades. You're hardly ever going to get stopped out. But it's in there just as what I call an airbag. Just like in your car, you hope to God you never have that airbag go off if you smash into something real fast and unexpected, because it's going to throw you back against the seat. People have had problems with them. You get a little whiplash in the neck sometimes. You got to go to the chiropractor. But the main thing is you didn't go through the window, right? So that's what the 5-point stop is for. So right here you can see a new buy channel's opened. The conditions are met for matching dynamic trend bands, a pullback to the signal line, and a 3-point gain is taken. Then you have what's called, there's only these two trade setups. The second one is a second level trade, and that's where you get a counter move, and it has to show a counter arrow, like it's shown here on the downside of this uptrend, that fails. Now, it might continue, and then that, if it does, and it pulls this dynamic trend band down under number 2, it resets the whole market, and you watch for the next setup. If it doesn't, and it fails like it's doing here, and then they shoot back up and create another buy channel, you trade the next pullback signal line. 99% of the time, you're going to have matching dynamic trend bands, so you already have that rule in place. You got a second level trade, a pullback to signal line, which occurred right here at 56.75 on the mini NAS, and they shot straight up within a minute and gave you your 3-point reward. So within this small little area here from 8:45, I think this was today, 8:45 to 10:02, about an hour or so, hour and a half. Let's see, 9, 10, about an hour and 20 minutes. You had two trades that you made 3 points on, and depending on how many contracts you had on, you made a very nice living from that. 6 points, If you had 4 contracts on moving at $80 a point, you made $480 minus the commish. Well, here's an example of a sell trade. Now, I'm going to do a little quiz for you, and then we'll get into the congestion aspect. Here's a new sell channel opening. And again, you don't even think about doing anything until a new buyer sell channel opens. And you got to be fast, and of course you want to anticipate it, and that's why I built the Cobra in here. It allows you to mentally anticipate when a new buyer sell channel is going to open, because the Cobra is going to front run the dynamic trend bands by a little bit, enough to usually let you know. You can see the Cobra crossing over here and turning red on this candle, diving down. You get ready, there's the new sell channel, and then you prepare by asking yourself, have the dynamic trend bands? That's all we're looking at. We're not looking at any of the bias indicators down here. Have they crossed over? Are they within a point and a half of each other? You see where the arrow's crossing on this candle? The spread right here is 58 quarter, and that's why we use cursors. You move your cursor up here and it's 59 quarter. See that? I put the cursor down on the blue line, it's 58.50, and I move it up to this magenta line, it's 59. Easily within a point and a half. So you're permissioned by that tight spread to take the next pullback, the sig line. You're permissioned by the system. You have to be very disciplined here, just like being in the military. You're standing in line and your sergeant is giving orders. You don't start chewing gum and talking to the guy next to you. He's going to come over and kick your butt. You are not permissioned to do that. If you want to have discipline in trading, you have to get used to this type of discipline. The losers in trading are the ones who always want to wing it. And I've had people, when I say you're permissioned by a system, and they email me, what does that mean? What are you talking about there? See, they think they just want to wing everything. But when I say the system and the rules permission you to take that trade, they don't like to hear that, because they just want to do their thing and wing everything, and that's why they're losing traders, and they generally get out of the business after a very short time, after a couple account wipeouts. So I'm encouraging you to follow military-like discipline, following Boomerang. Let the system permission you to take the trade, which it does here. So what are the other two conditions that are required to be permissioned to take a new first level trade? That's correct. They have to be within a point and a half for each other, as this one is here, before the next pullback sig line. You have a crossover that has already occurred. In other words, they're a point and a half or closer, or a crossover already has occurred, or they're matching colors. Now, this is a good example here because, first of all, the arrow hits, they're already within a point and a half of each other. That tells you your permission to take the next pullback signal line. At the point of the next signal line getting hit here, they're right on the verge of crossing over, so you're permissioned by the crossover. And down on this candle here, they're matching color, but ideally you want to get in the earliest pullback to the signal line once everything's matching colors. That's the rule. The earliest one, you want to get in right away, and the purpose of that is Boomerang sets up the bias on one side of the market, gets everything ready for what's called a momentum blast. Using technical language, that's what Boomerang trades are. I call them boomerangs, because like if you throw a boomerang out, it comes back. Technically, that's what it does. A momentum blast is the market's been up, now it moves lower, all that force gets on that side, and what was up now returns the other way. And that's a momentum blast, technically. So right in this little space, I showed you a first level trade, a failure of the counter move to upset the uptrend, a second level trade, and a third level trade going down. They're coming down. Okay, so now we know what the rules are for trading with Boomerang, other than some minor supplementary rules which are known as fat channels. And again, please watch that video that I expressed to you to watch, and that'll do all the work here, so we don't have to take up that time here for many of you experienced Boomerang users in our trading class today. Just go to boomerangtrader.com, go under 90% winning trades, and you'll see the two Boomerang day trader setups for entering trades. So I just showed you the synopsis, and the minor rules about a couple of things are there. Now, what happens as you become an experienced trader? and you're merrily going along making a lot of money. Oh, and by the way, I forgot to show you this. I wanted to show you this. This came in today. I really like this endorsement. I get them all the time. What I do is I just copy paste them onto an ongoing email, and I have been posting them on the blog, but I like you to see them because it shows you these are I just copy paste them right off the emails I get, and I block the person's name out because we always promise them anonymity. But you can see that these emails, they're just copy pasted right off um, the emails that come to me. I don't doctor them up or do anything with them. I don't need to play games like that. I've been around in the industry almost 16 years, and I got to where I am today by not playing games like 90% of the other guys out there. Sorry, you other guys, if you're in the room. A lot of them lurk in our room to try to figure out how they can, do similar things to what we're doing. Well, the first thing you can do if you want to do what I do is be honest and just tell it straight. And if you don't really trade, tell people that. Say, hey, I built a great system. I can't trade, or whatever reason. Just admit it. It's easier. But anyway, I just put this one in today for 1416. Listen to what this relatively new Boomerang trader sent to me. Real straight. I trade 10 contracts, NQ contracts. I target 2 trades a day for 4 NQ points. I'm already done for the day. He wrote this to me mid-morning today. I try to tell others about this, but only one person has seen the light and signed up. In other words, he referred someone to me who bought Boomerang. Once they see that I'm making $400,000 a year, quote, working a few hours in the morning, maybe they'll come around. I can't thank you enough. Sincerely, PH. So that's brand new, added to the list of testimonials. They're not solicited. I just take them and copy them on there. Hey, they sent it to me. I don't use their names, so I just copy paste them on this list. So I thought you'd appreciate that. This is a person who watches these webinars. He's watched them over and over, I'm sure, that I'm doing right now, and he gets it. He found, and he maybe altered a couple of little things, or for himself, maybe said, well, I only take a trade when this, or, mostly just following exactly what I'm showing on there, and the end result is he's making $400,000 a year trading with Boomerang. Some traders, I send out a promotional piece. I say, make $200,000 a year trading Boomerang out of your home, and people accept that. But sometimes I'll get an email from a smart aleck, oh, come on, da 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 da. That's because he's a losing trader and he can't imagine anybody making money. But we make money at Boomerang, so he's jealous or whatever his problem is. I said, we got many examples, and there's another one right there, an email directly from someone doing incredibly well. And there's others in my testimonials too. If you want to read those testimonials, you can just go to the blog under resources, and you'll see, if you scroll down, recent updated Boomerang day trader endorsements, and I put Paul's on here today. Oh, I guess I didn't see that. I commute to my desk. My commute to my desk is 15 seconds. I like that. My commute to my desk is 15 seconds, so he doesn't have to drive far to get to work. Anyways, with that, let's get into the congestion. Trading is a difficult business. I'm not trying to make it look easier. I'm just showing, well, I'm not trying to make it look easy. I'm trying to make Boomerang trading makes trading easier, but I'm not saying it's easy. It's very difficult. I'm showing you the setups that we take here. And what I'm going to do now is I'm going to scroll back. Let me see what my setting is here. You go right here, you click on data series, and you go over here, and you look, I got 10 days scrolling back here. So let's put 14, which is 2 weeks, because generally these webinars are based on, every 2 weeks. And sometimes, like yesterday, I had to change the schedule a little bit. But I always do them, and I always record them. So if for any reason you miss it, or if you were counting on coming yesterday and, oh, he's not going to do it, don't even worry about it. Whenever I do it, I'll have it recorded. You'll be able to watch. It's kind of a routine thing now that they're all recorded. I got a nice new recording system for these things. Comes out really good. All right. Well, listen, let's talk about congestion in the markets. which is the topic of today. It's a special topic for this particular webinar. I'll be talking about this just a short while, then I'll end the recording, put it up on the blog, and you'll be able to, we'll go over question and answers that you may have. First of all, you have to understand we are day traders. Boomerang is for day trading the futures markets primarily, although like I said, it can be used for other things. As day traders, the scourge, the curse of every single day trader that ever existed, and that's out there today and probably forever, will be whipsaw, stagnated, congested markets. How many incredible systems, automatic systems, everybody's dream to turn it on a computer and go away and come back and there's $1,000, and it happens every day, and you never have to work again. You don't even have to trade. You just turn on your thing. It's a dream that a lot of people believe in, and that fantasy is sold to them by vendors. I'm telling you, I have tried for years to build an automatic boomerang system, and it's incredibly difficult, and it's difficult for others too. And there are those out there that are traded over long-term successfully, but so many of them, I've done a long-term research on that. I've kind of backed away from it now because I've done it for over a decade. And the really successful ones will have incredible quarters, up 60, 70%. And you'll see them in some of these systems that they sell at the brokerages and stuff. They're always fluctuating between the top of the list and the bottom. You'll see a certain system up 90% for the quarter. It's the number one listed system. Just give it 6 months and then you'll see 6 months results, or the following 3 months. They usually do it by quarter. The following 6 months results, bottom of the list or on the lower part of the bottom of the list. That's because of congested markets. Automated systems will rack up gains and then they tend to give them back during congested period. If you have a steady congested period, that system is just going to just drain your wallet dry. But if if you have the attitude, which is very hard to have, of just leave it running and just go on vacation for a few months and come back and it'll make you money, I can't do that. Some can. I can't do it. I can't stand to do that. I can't stand to watch something just draining my wallet and you go away, and what if it stays congested and you come back and it was up 60%, now it's down 120%. You see what I'm saying? We're going to talk about congestion here in terms of trading with Boomerang, and I'm going to show you how to, as best as possible, solve that. It takes some work, but you don't have to worry, because 90% of the time, if the Boomerang trades are set up correctly, there's not going to be any congestion. In fact, just the opposite. They're going to pull back the signal line and ramp straight up or down, depending on the type of setup it is. You're not going to have to wait or worry about congestion. Where you get into congestion problems is here. There's 6 things I'm going to talk about. I'll go over them briefly. Number 1, how to use Bollinger bands, and all these are related to congestion. Using the instant color bar changes in the Boomerang candles, using volume, watching for big moves on a top and a bottom of a big move, watching the higher time frames, and the big one, which is a little bit harder to grasp, you'd have to know what to watch for, but I'll show you that today, and that is watching for what are called the riggers. I used to talk about this in 2001. Everybody thought, you're a conspiracy theorist, you're nuts. Now everybody knows the markets are rigged. In fact, Alan Greenspan, the original rigger grandfather, and literally why he goes on TV, he's on CNBC I think today or yesterday, why he even goes on TV, God, he looks like he's ready to fall over. He did way back 20 years ago when he was first coming out. He's on there just kind of, they're probably going, why doesn't he shut up? He's on there just babbling about they're out of tricks, they have nothing more to do. Basically, all their rigging tricks they've done with the market, they're not working anymore. They're without starting quantitative easing again, which is a fancy word for rigging. I had one guy saying, "Oh, the market's not rigged. There's no evidence of that." I go, "Well, you ever heard of quantitative easing?" "Oh, yes, that's when they blah 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 blah." These guys, blah 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 blah, and then they do a special bond buying program. Hey, pal, that's called rigging. Oh, yeah. Anyway, we're allowed to have fun with some of these people. Market makes them nuts, and we just try to have a little fun with them. Anyway, congestion's no fun, but these are the way to work with it. Let me go over these with you right now. First of all, let's start with a strong top and a strong bottom. In other words, a big move in the markets. Let's see where this one went. Now here you can see this market starting right off with congestion. Well, the first thing I recommend is when the market opens, start yourself off right. Don't trade for the first 15 minutes at least. I never do in my live trading. I never trade for the first 15 minutes unless I've really got some insight that I want to get long or short, and the thing's already preset up in that, and then the market opens and they hit them. I'll sometimes take a chance on it, but usually I don't. Here's the first 15 minutes. Let's take this session here, and it was because it's starting right out. In fact, let me fix that right away here. All I got to do is go to the data and pull it back to 15 days instead of 14. And we will simply go back that one day and go to the next. So yeah, okay, there, fixed. Well, I think this is the previous day. Anyway, you get the idea. Now let me go one day forward because that was the whole plan there. I took it back one day so that I could get this thing to move forward here. There we go. Now we can clearly see. Now see what happened is here on Globex, and always have your charts running the whole 24-hour span. On Globex, they ramp the market up here. So you already got a big move up here. After what? Get used to doing this. It's real easy. You're a trader now. You got to take it real serious. Here's a big slam. This is typical. They kind of jacked the markets up and hung them up and hung them up right into the final half an hour, started selling them off. Then they hammered them out into the Globex. So the next day was the market may have been a little bit bearish there. So what happens when they hiked them up in pre-market? I consider what I call pre-market is the first hour before trading, because a lot of government reports come out then and all that. So I call that pre-market, 5:30 my time, which is 8:30 New York time, and whatever time zone you're in. So they hiked them up here, and it was like an overreaction to a downside slam. So what basically all this is here is the bears are going, yeah, oh man, it's bearish. Look at Globex. Well, then whoever it is, be it the riggers or the market participants on the bullish side, come in here hiking them up, excuse me, created what I call a bias arm wrestling match. You see that? They retraced this entire move by 3/4. In other words, they dragged it up to this is probably the Fibonacci number right near this area. Excuse me, been working all day in my room too, so that's called a bias arm wrestling match. Watch out for congested markets. Now, do you see what I did? Excuse me again. All I did was saw that they smashed him down very hard on Globex. They ramped him up here before pre-market, and then into pre-market they ramped him up. By the time they got to the opening, you had an official, what I call a bias arm wrestling match. That's going to cause congestion and whipsaw in many cases. In most cases, if it's a genuine bias arm wrestling match. Like, picture two incredibly strong guys with tattoos all over their arms, and they're going to, in one of those rowdy biker bars, and they're going to have an arm wrestling match. They both got $20 on the deal. And they're both gritting and grinding, teeth gnarling, and one's going to eventually win, but, during that period, this is what you're getting. The biases are arm wrestle. No, it's bullish. No, it's bearish. And guess what these are? These are the amateurs coming in here thinking they have to have an opinion about the markets. creating, a lot of this is created by amateurs, which we're not. We're boomerang traders. We are specialists. Arm wrestling the market here. You see? So wait 15 minutes. Here's approximate 15-minute point right here. Now, not that you would have necessarily jumped in, but this is another method for trading when you get in a congestion phase. First of all, wait. That's the first rule. Don't even dare go in and try to fight this and pretend that it's a boomerang trade of any sort. You don't have to trade. You don't have to trade for an hour. You don't have to trade all day. You have to trade until 3 hours after the opening if it's not right. But look what happened here. It's another part of the method of determining. So here's the opening. You've got everything starts flipping. Now, first thing you notice, coming in here, let me open this up a little. First thing you notice is, okay, just before they open, you get strong down red candle, counter run up again, pullback, green candle, blue dot, red candle, yellow dot, sell channel, buy channel. Notice on these two candles, you got the buy and the sell channel opening up and alarm signaling right next to each other. That's your very first. Well, this candle here would have warned me right away. And I don't trade the first 15 markets. I'm just watching all this going, aha, it's an arm wrestling match. And then I already had usually looked back and I said, I can see why. You retrace the fib number all the way up here, and now everybody's going, is it bull or bearish? And so the amateurs are coming in here, and the market starts, and they're all getting stopped out and pounding their fists on the table, and they don't know what they're doing. You know, they just randomly trading without any kind of system at all. But then the minute you see this sell candle here, buy candle, jumping up, sell candle, right here, that's it. Stand aside. Forget it. Boomerang is programmed to follow the markets. So when the market's all flipping, you're going to get these counter yellow dot, blue dot, yellow dot, blue dot, yellow, blue next to it with a counter arrow. That's boomerang, another way of boomerang telling you, stand aside. What do you do next if you absolutely feel you have to trade? The simplest thing in the world. Watch for matching dynamic trend bands with a channel opening on that side and trade the pullback to the single line. Now, none of that, you notice, none of that occurred here at all after the opening until you got right to here. Matching trend bands, new channel, pull back the signal line here or here, in an instant 3 points. This is not a boomerang trade. Well, it appears to be. Oh, technically it is, because the DTB number 1 is still below it. The trend bands are matching. You got a sell channel. If you went short here at 79.5, they came all the way down to 77.5 and whipsawed. Well, again, it's this spike candle after this run up that caused this big giant drop. That's another one of the symptoms of a whipsaw market is 3-point candles or more. Now this one here, if I measure the top, 81.50 to 77.50. You see that? 77.75. It's 3.5 candles or 3.5 points. Big warning. Don't trade. You see? So this one, even I wouldn't have even taken this one. I would say forget it. It's whipsaw, let it settle itself out a little. No hurry to trade. If you wait 15 minutes and if it's still inappropriate feeling, just wait until the top of the hour. Because a lot of times at the top of the hour, another report will come out or something. Make sure and check the economic calendar. You should always have that programmed onto your tray there. Just go to the economic calendar and check this every day. Make sure there's no reports coming out at the top of the hour. If you're in the middle of a whipsaw congestion, a lot of that can be caused too from government reports coming out. People are confused about the bias. They start arm wrestling, and then so at the top of the hour, just make sure there's nothing coming out. So this one here, you don't want to trade this because it's starting out with a whipsaw period, all congested. There's no boomerang trades in here, so sometimes I get emails. People say, how do deal with congested areas, I go, well, you're a Boomerang owner. You're not going to normally be dealing with congestion areas because you're going to know how to look for congestion like is shown in this tape. You're going to be waiting for matching dynamic trend bands at a very minimum if the market is whipsawing and in a congested area. You're going to be watching for matching trend bands, but there's more to it than that. The second thing you want to do, well, like I said on this one, this is not a Boomerang trade, although the dynamic trend bands are matching. This kind of crazy spike candle stuff is really something you wouldn't want to take. Just common sense. Now this one here, this would have been pretty nice because look how everything's smoothed out here. Everything's a little tighter and more compact. You could have taken this trade here. Now I realize that is a third level trade, but it's not technically, because you're coming out of a whipsaw phase, and the truth is this crossover of the dynamic trend band under number 2 reset the pattern. Like I said, I wouldn't have taken this trade, but this reset the Boomerang pattern. So when they crossed back over here and all the trend bands are matching, you're in a reset pattern. You just buy the pullback signal line and up they go. You have to have some faith in that. There's no second level move here because there was no counter arrow on the downside and there was no arrow counter on the buy side following that. You have to have those two setups. So that's one primary way you deal with congested areas. Is there a reason? Here's the question I want to ask, and you can write this down. Is there a reason for a bias arm wrestling match? And those will occur a lot of times in pre-market where you get a big swoosh to the up or downside, and then on the opening the next day a counter move swooshing to the downside. That's basically a formula for a congested market. They're going to argue over that when the market opens. The amateurs are going to go in there and start attacking the market, thinking their opinion makes any difference to the market. I'm bullish. I'm bearish. Nobody cares. The market doesn't care. That's for sure. So, the next thing you can do, we covered the instant color bar change. Watch for that. Blue dot, yellow dot, right next to each other. A up candle, and then the next candle is a down candle. That's not anything wrong with Boomerang. That is Boomerang. That's Boomerang, one of Boomerang's signals saying stand aside. That's all. So big moves on the top or the bottom. I can go and look for an example, which I'll do real quickly here. I'll scrunch the chart up and I'll go see if I can find an example. Well, this is an example in a sense here that they go up, 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 and then crunch. You got to watch these because those crunches right off an up or down move will do what? It'll in most cases form a fat channel, and we don't want to trade at the bottom of the fat channel. But we do have the modification rule where if there's a brand new crossover occurring and there were no pullbacks to the signal line within that period, you can trade a pullback to the Cobra. But this one got a little extended away from that. Most of you know what I'm talking about. That's a modification to rule number 1. Here's a big extended move. Now, this is coming into the close, so it's a little rare. Usually, you're going to get congestion after that. Not always. Sometimes they'll just reverse, and I'll go over that in a minute, how you can spot that. Oh, okay, here, classic. Now, again, this is going on in on Globex, just before pre-markets right here, 5:30 on my West Coast chart here is pre-market. Prior to that, I just call it Globex. But here's a classic example. Big hammering to the downside after the markets close. Spike back up, and then right there, congestion going into an arm wrestling, bias arm wrestling match. Pre-market down again, opening congested. Let's move this wider here. You see that? It's because of the arm wrestling match and a big strong hammering 5 minutes before, or about a half an hour before the market opens. Congestion right up into the opening, and whipsaw coming in. Don't even bother to trade. Yes, there's matching dynamic trend bands here. A pullback to signal line, 47 ran down to 40. You can take those if you want. That early in the game, 3 minutes into the opening or 5 minutes, it's up to you. Higher risk trade. Better to play it safe. But that you can see, Boomerang's so wonderful and accurate. It works out even in the midst of right after an arm bias wrestling match. Works right away. Here we go. Opening candle for a new bias run. What happens? Big spike up. That's okay. Just be careful. Watch out. And watch for everything to be. Here's another big key rule for something coming out of a bias arm wrestling match period. Tight trend bands close to each other. If they get too far spread out or they're in a whacked out kind of shape, that's where you a lot of times run into problem. But you can see here with the chart set at the normal setting, nice tight crossover. Not the cobra's not way up here. It's tight in here. So everything's pretty tight. You get the crossover, you got the pullback to signal line, but after this big spike, be careful. Let them kind of figure out what you're going to do here. You can buy them here or here, but you're going to get a little bit of pain on the trade. That's all, probably because of the spike up here. Just wait and try to, on something like this, try to get what I call getting a discount. In other words, it's like a mini fat channel, but rather than just trading them right in here, see if you can get. I usually use just a random 1 point because when you're trading in the heat, it's too hard to try to figure things out and run calculations. I'll just say let's get a 1 point discount, so it's 50, 44.50 even, and then they come up here, and I'll just say, oh, let's get them at 49.50, and there it is here. Wasn't near the bottom; they still dropped lower, but at least it was a discount, right? So that is another important thing to do is watch those higher big moves. Now let's watch what happens here. I don't even know what this chart's going to do, but here's a big massive up move, just smoking them higher and higher and higher. Here's a counter move, right? You can see this. It's a counter move, but it actually failed to fully cross over the dynamic. Well, the dynamic trend band definitely crossed over here, but it more or less it it caused it to happen, but they're immediately back on the upside, which is fine. All that is a reset. It's not a boomerang trade because you don't have the matching trend bands, and the crossover is occurring on a steep upsloping dynamic trend band number 2. But immediately, though, if they shoot back up and the trend bands are matching, you can go long here at 86, and they ramped them up to 90. See that? These matching dynamic trend bands are beautiful. Whenever that happens, the trades, the percentage ratio goes way up. They're so accurate. And we're just scalping for 3 points. You're not trying to figure out if it's going to go way up here or whatever. That's another game which we talk about on other webinars. Now look how this thing keeps going up and up and up. It's calling for a congestion phase here. Let's see what happens. Well, okay, they turned right around and smoked them lower, but look what happened though. There was whipsaw here in the sense that when they finally got tired, there was a lot of hammering on the downside, but it turned into a nice boomerang trade. The DTB number 1 was already under there. The colors match. You got to take those trades. You could have maybe tried to do the discount thing here because of this. So, okay, the first pullback sig line's 98.75, so I'm going to sell them at 99.75, or the Cobra, and that would have put it right up there at right under the 4,500 handle. Perfect entry there. Very smooth day on this day. No congestion. I'm looking for a congestion area. Here's a classic trade here where you have the dynamic trend bands actually did not match until you got up here. But the rule we deploy when this happens and the pullbacks to signal line are used up before an actual boomerang setup occurs is when you get the crossover, you can buy a pullback to the Cobra. And I tested this in it before I released it as a rule. You get that crossover, you can take the next pullback to the Cobra here, and they'll usually hold and jump higher. Now you don't want to get too many candles out from there. In this case, it's a little further out. Let's see, we got crossover 1, 2, 3, 4, 5, 6. the seventh candle pulled back to the Cobra and gave you your 3-point winner. That's a little far out. Usually 4 to 5, maybe about max. But just for demonstration purposes, you can watch that. I've tested that rule and it's good. That's why I introduced it. Now here's a classic counter selling arrow on the downside from a big up move, and a classic re-enter the buy side. Of course, matching trend bands are always 99% of the time they're going to match on a setup like this. A pull back the sig line at 13.5, and they run up to 17 quarter for 3 points. Another counter move. These you just ignore. You're coming into the close. I can't find any congestion areas so far, and all these are turning right around after big moves. It's rather unusual. Here's a little case of that, where you get a pre just before the open, half an hour before the opening, they're slamming them to the downside. Then they open right about here. You might get a little congestion phase. It was very minor, and no counter move here, so you just wait for this to play out. Another downside move. Everything's smooth. You know, Boomerang is usually very smooth. The congestion areas are usually caused by what I'm showing you, and you're normally not going to have Boomerang trades on in those areas anyway. There's no Boomerang trade here. The trend bands aren't anywhere near crossing over. They're not matching colors. You're going to miss some stuff. I mean, it's part of trading. It's a little bit frustrating here. They just bloop, down they go. But if you're like our friend that emailed me today, he's waiting for just 2 trades. He's waiting for the perfect trades. Usually gets them within the first couple hours of the market. But he doesn't care if he doesn't, because he's going to put 10 contracts on. And that he just wants it to go and give him that 4 points. So he's waiting. He'll wait for the perfect setup, and he knows what they are. And they are these smooth transitions of the crossover, the dynamic trend bands, within a point and a half or crossing over. And here's a classic case here where the market, this is that modification rule we're just talking about using the Cobra. The market goes ramping up. There was one pullback right at the candle. It didn't hit the sig line, so it used up the 6 candles before the pullback sig line. Well, here's one here. That's a fact. And that would have been fine to take that one, or you would have used the discount idea here. Try to get them a little lower because you got a little mini fat channel here. But definitely, here's the crossover, and within 1, 2, 3, 4 candles, there's the pullback to the Cobra, and take that. So if for any reason you miss it or you're watching in the meantime, take that Cobra pullback there. Look how smooth all these big moves transitioning are. Weird. Here's a little congestion area. Notice a counter buy arrow. Counter buy arrow didn't in any way upset the trend here. But what happened, and this is another thing to watch out with. Well, number one, it's late in the day, so forget it. If it's 45 minutes or so before the close, you're probably better off just forgetting it, you know. Just don't even waste time. Looking for some congestion. Here's one here, but this is again in Globex. Huge move to the downside after the market closed. So when they finally opened up again, they just went nuts. All our European friends were in there maybe trying to trade this action like they do. And there is a transition into the U.S. market, you know, right at this marked 6:30 here, 9:30, and then by 11:30 they start kind of bailing. Europe starts bailing out of the U.S. market. So anyway, here they are opening up, and once again, this is the beauty of Boomerang, is even though you've got in the pre-market you got all kinds of whipsaw going on, when they finally opened here, you've got the matching, you got the new buy channel, matching dynamic trend bands, pullback sig line at 71.75, and up they go for 3 points. It's just, even though you're in the midst of the whipsaw, I'm not recommending you take these trades, but it's amazing how well Boomerang works when all the dynamic trend bands are matching. In fact, let me show you this real quick. We have a method. When things were getting really crazy back in January and everything, I was doing these classes, and I I knew it was that bad because I was seeing it myself in my daily trading. And I created, let's see if it's on here. Where the heck did I put that? It's what I called the bunker method. In other words, like, yeah, you just, when there's so many bombs going off and bullets flying, just get in the bunker and stay safe. Let me see where I put it here. Hold on a quick second here. All right. Well, I believe it's here under the blog. Let me just scroll. I'm just trying to find it before I bring it over to our screen there. There it is. Just under the blog. In fact, I should probably move this over to the resource center. But using the bunker boomerang trading method in these volatile times, you can see the date, February 2nd. The market was absolutely going insane during that period. And I devised a method. You know what it is? The bunker method. Wait for the dynamic trend bands to match and only take those trades. You may have to wait a little while. You're going to miss a few deals. But just take the trades where the dynamic trend bands match color, and you will have all winners, even if the market is going insane. Now, not on the, well, even here, this one made a winning trade, but watch those fat channels. They're going to, you don't want to trade those matching dynamic trend bands. You see that? Even here, even though it's way down here, 59.75 dropped down to 50, just eked out 3 points, even though it was at the bottom of a huge down move with two massive spike candles forming a big fat channel. The matching dynamic trend band still gave you a winning trade. Same thing here. If you want to be like our friend who I showed you today's endorsement, wait for matching dynamic trend bands. Put on 10 contracts and watch how much money you make. But you got to be able to afford it. Make sure you can afford that. And if it goes against you, you're not going to do damage to yourself, in your bank account. Anyway, I'm just giving you an example. I'm looking for congested markets here. They're going to show up under other circumstances. So let me go up to that. First of all, another thing you can do, watch the end of big moves. That's one of the rules there. Another thing is of course, you must have a volume meter. This is what mine looks like. And over on the blog, if you don't know this already, you can use NinjaTrader to build it. You don't need a data feed to build this like our high five. You've heard me talk about that before. Let's see. Under resources, scroll down. Here's my little post in class on the how to set up and build the volume meter. You can see it right there. Same thing. Takes you through step by step. Step 1, this is how I like instructions, directions stuff. Step 1, go here. Step 2, do this. Step 3, do this. I like them numbered and real simple. You ever get directions when you're driving? They say, well, head north. And then after you go up about 5 miles, head southwest. What? All I see is streets. I don't know, southwest. What are you, crazy? You know what I'm talking about. Sometimes people do that. They go, head north. I don't even know where that is. North. Oh, yeah, okay. And then when you get off on this street, head east and then yield towards the north. What? Anyway. Volume meter, you have to learn to read a volume meter. It's not hard. It's not absolutely required for Boomerang, because Boomerang's so simple, but it's called the gas tank of the markets. If you're driving a brand new car and you're driving around with your friend, you go, man, we've been cruising for an hour. I love your new car. This is great. And he goes, how much gas we got left? And you look at him and you go, what are you talking about? And he goes, hey, man, how much gas you got left in the car? And he goes, huh? You see, that's a clueless person. He's all enamored by the new car, but you can't forget while you're trading and enamored by the markets and excited you're making money with Boomerang, make sure and check how much gas is there. Here's today. Let's see if this is today's. I believe it is. Okay. It's not hard, but you just build the volume meter like I show you instructions. And here's how you can watch. Here's one of the most important things to watch for with congestion. Low volume. So on the volume meter, you have the 7 on NASDAQ, and they're different for each contract. And I show you on another post, by the way, if you're going to use the volume meter for another contract and you want to change these lines or build a separate volume meter, which you can save and mark it volume meter ES or whatever. You can go right up here and change the contract, but the line levels are going to be different. But over on resources, I show you exactly not only how to apply constant lines, but also how to figure out where to place them if you're looking for a certain level to mark them. So you can check that also under resources. See, I'm building all these things out in here, so you always have these at your fingertips. You don't need to necessarily, you can email me and I'll guide you to this, but just check the blog first and a lot of your questions will be answered there. But look at this. Let me do this. This is a good idea here. What I'm going to do is hook up the cursor to the crosshair, and I'm going to hook, well, that's going to make the chart disappear. I'll fix that in a second. And then I'm going to hook up this cursor to this crosshair, global, what's called global crosshair. You know what? There's something that I can put it back in the chart. I'm not sure exactly. Well, okay, here's what I'm going to do for right now. Real quick trick here because I want to show you this. It's very important for congestion. This is the easiest way for me to do it right now without going nuts trying to figure out how to show you congestion. First thing I'm going to do is shrink the volume chart just a little bit here. There we go. Pull this boomerang chart over here, and then I'll shrink this. In fact, I'll get rid of we don't need the buy or sell thing, and we're not going to trade right now. We're going to shrink up the chart trader, pull the whole darn thing over. There we go. Now, they're going to all be correlated together. So the first thing we're going to do is going to go back here. Let me figure out here what happened. Just a quick second. It's very important. And you can do this at home. There we go. Now they're connected. You see, when I move here in the chart, it moves on the left side there on the volume meter. So let's find a congested area, and I'll guarantee the volume will be really low. Here's a mini congested area. Volume's dropping down. Under the magenta line marks the 200 contracts. The higher the magenta line marks the 700, or I'm sorry, the green line marks 700 plus average contracts trading, and the magenta line is a warning sign if they're dropping under 300 contracts. They start getting under an average of 150 or so, you got a problem. Now here's an example where they dropped right down to 173. See that? And down here, very light. But what I'm saying is, if you go to any congestion area, like right in here, oh, classic. Okay, this was early this morning on today's trade. The volume, it's a little bit lighter. It's dropping down. Let's see. Now here they're spiking up because the riggers are trying to keep propping the market up. But notice when they start dropping down, you just have to be a little careful. It's still pretty active here. Let's find a true congestion market. This was all whipsaw. It's the difference between congestion and whipsaw. Whipsaw will occur in congestion, but whipsaw is like a big spike candle. And I think some of the question I had about congestion were referring more to whipsaw. There's not a lot you can do with that except my final thing, and that's how to learn how to watch out for the riggers. And I'll get into that in a minute. But let's see if I can find a classic. Well, here, for example, especially after 11:30, volume can tend to slow down. So you're watching the individual candle here, and you're watching for trade If one wanted, they could even put an additional line here under 150. Therefore, you'd have 150, 300, and 700. Problem. Oh, now here's a congestion here. Let's see if that volume. Yeah. Well, let's see here. No, volume was still pretty strong. As long as the volume's strong, you can continue to look for boomerang trades. It's when they drop down. Now this doesn't count because this is pre-market, but you can look at the volume there. See where my cursor is showing there? 95 contracts. There was a spike here, so that drove the volume up immediately, but that's because the market's really slow. Now they're coming into the opening, and the volume's going to jump up to anywhere over 1,000 to 1,500 contracts off the opening. That's normal. Just trying to show you an example here. Here's coming into the close. Look at that. Coming right into the close, you can see that volume dropping right off. When you see fast volume drop-offs too, that's another key. Watch out for congested markets. If you see the volume being averaging above the green line or 500 to the green line, then all of a sudden they drop off under the magenta line down to minus 150. Like I said, it'd almost be worth it to put another constant line in here, but when the meter is contracted like this little, you got too many lines. It's when it spreads out it would be valuable. But you can just use your cursor and just go 150. Yikes. Or you'll see it on the right side here. Okay, I don't want to run too long. I want to get to all my points. So watch the volume meter also, and that will help you to, when you see the volume shrinking, dropping from a really fast level to a lower level, that's another really good way to watch for congested markets. I've got this habit whenever I change something on the chart, I just take care of it right away and move it all back so I don't have to think about it. And then if you make a major change, right click on the chart, go to templates, and save that template under Boomerang or whatever your chart. If you have another chart with another name, save it there. Just make that habit, because what happens is if you accidentally shut down your charts or turn off your computer, whatever, whoops, you forgot to save it, and now you got to rebuild whatever idea that came in. I've done that too many times to where I finally got the habit. Now it's like a habit, like brushing your teeth. Save the chart, you got to save the chart. You brush your teeth before you go to bed, save the chart. All right, well, I am absolutely not getting any luck on congested areas lately. It's been really active. There's a few here. Here's one here. Again, this is going to be most likely a low volume area. And you can watch down here also on the bias index number 1 for small candles just hovering around the 0 line. Same with bias index number 2, just small histograms hovering around the 0 line. That's a congested market. So we covered volume. I want to talk about the higher time frames. Now the problem is I don't like to do this much on these webinars because people might be watching wanting to buy Boomerang, and it gets, oh, there's so much I got to do and learn, and it's not true at all. You're not going to really get into Boomerang trades in a congested market in the most cases. It's not going to happen. You don't want to. One of the rules of Boomerang is you don't trade flat dynamic trend bands. So unless they're kind of sloping one way or the other, number 2 especially and number 1, but if they're flat like right here, be careful on a Boomerang trade. You can see the Cobra and the dynamic trend band 1 or 2 are completely flat against each other. It's usually a sign of a new trend getting ready to open, but just wait till they slope, and that's what brings us to the next trade, and that is called using the Bollinger Bands. I put in Boomerang a standard it's Ninja standard 14 period 2 period standard deviation Bollinger Band. It's just when you go to Bollinger Band and you add that to your chart, it's going to be the 14 with the 2 period standard deviation. Here's the value of that. Here's the market going up, and now it's stopped. Well, one of the best hints for taking a trade or a new channel starting is when you get a new channel opening and you get a tap on the Bollinger Band. That's like a tap on the shoulder of the market saying, hey, I want to go that way. Even if they reflect back to the Cobra or even more, still that tap can often set a downside direction going. Same on the other side. Here's a tap on the Bollinger Band here. Even though the DTBs are flat, notice how the market's trending up, tapping it again and again. Now the most important thing here, look how they go back to the downside. And as soon as they cross over, there's a series of tap, tap, tap on the Bollinger Band. They're just what I call walking the Bollinger Band down. There's that pullback signal line, and they're just walking it all the way down the Bollinger Band. See that? And it keeps going. So the Bollinger Bands are very valuable for watching to stay out of congestion and wait for a new correct trade setup to occur. We have our regular rule, which is the crossover being 1.5 or less, or a crossover or matching DTBs. Watch for them to tap the Bollinger Band here. It'll increase your odds of that not being a whipsaw trade. Here's a tap on the Bollinger Band. Here's a pullback signal line. Now you've already used up 6 candles. 1, 2, 3, 4, 5, 6. See that? There was a dot on the signal line pulled here. The 6th candle after is right here. No pullback in the signal line, so it didn't mark it. If it did, it would have marked it there. But now you're getting, they're all, in other words, all those pullback, the signal lines have been used up. So the modification rule that comes into place there, where you have a crossover, if you didn't trade it here, if you traded it here with the spread tight, you would have got your 3 points already. If you waited and now they're crossed over, you can always trade that pullback to the Cobra here. And again, off they go, and that was lit up by the tap on the Bollinger Band. Look at how that moves. Now let me show you some examples. I'm going to scrunch the charts and just go forward, and I'll show you how that works. I'll just go through all the markets, even on the Globex or anything. Tap on the Bollinger Band. Okay, markets flipping around. This is after the close. Hard to really use that as an example, but tap on the Bollinger Band, down they go. Tap in the Bollinger Band, and even though they pulled all the way back here to the DTB, they're still leaning towards the upside once that tap occurs. It's one of the great, that's why the Bollinger Bands are so popular. And there's other ways to use them, but for Boomerang is the most accurate system in the industry, so we're just using them simply for that one very, very simple purpose. I mean, you can go on John Bollinger's site, and he'll sell you a whole Bollinger Band package for $800 with all these complicated different ways of using Bollinger. But you don't need that. That's a different. He's got his own system. See, so that's fine. We're trading Boomerang, so we're going to use our system. But we're going to use the Bollinger Bands, which are highly respected and used by hedge fund managers and so many traders that are experienced that they're very good. Look, tap on the Bollinger Band, even though they ricocheted all the way back here, look at how they pulls it down. No tap on the Bollinger Band, kind of a flopped back continuation. Yeah, I know they tapped them here. It's not a system, it's just an indicator. Tap on the Bollinger Band, well, look what happened. See that? Tap on the Bollinger Band, pull back. They walked him up here, another pullback, and they tapped him again and kept going. It's some kind of amazing thing. Now here's a tap and a little pullback. I mean, again, it's not guaranteed, but you can see how when they tap that Bollinger Band, there is a tendency, which is very consistent, to keep riding the market that way. No tap on the opposite Bollinger Band here, a tap here, and they keep going up. You see that? Every time they tap that Bollinger Band, they tend to keep rising on the upside. Now here's a tap right here, the first one right here on the downside, pull back, and they keep leaning lower. Tap here, a little pull, tap here, and that's it. But you see how that tendency is? That's why we put them on there. So if you're in a congested phase, based on what we talked about earlier, and this is a very important thing to watch for, just stand aside and wait till you get a Bollinger Band tap. Make sure that the dynamic trend bands are not absolutely flat, but there's some semblance of the Cobra, which is going to front run them, giving you a hint that the market's going to try to lean, it's sloping in that direction. Here's all these taps here. Now it's a crosser. Now there's our first tap in the Bollinger Band. Okay. Here's our first tap in the Bollinger Band, but look, Which way are the Cobra and the DTB1? They're sloping upwards. You see that? Tap, tap. Now they're moving up. Well, now they're clearly in an upward slope. They haven't tapped the Bollinger Band again, but it sure lit up the upside, didn't it? You see that? Tapping them here and still lighting up. Holy smokes. Now here they just barely tap them, but they want to continue, so they re-hit the upside and continue a little more. I mean, it's not rocket science. They actually miss tapping them here. Go up and tap it here again, and up they go. So you can see, if you go back over 10 charts doing what I'm doing right now, really condition yourself to notice this. If you want to get out of congestion, wait for a Bollinger tap. If it's freaking you out, say you've already taken one trade, oh, you got whipsawed out of it. Sometimes the hardest thing to do is just lay back and let it pass. But with the tools I'm showing you today, how to know what to look for when you won't get fooled again, as they say. Like that Who song, we won't get fooled again. You look for the Bollinger Band tap. That's a real solid thing, and that's why I'm showing you this thing right here now, so you can prove it to yourself. It doesn't, like here, notice a flat dynamic trend band number 1 in Cobra. That Bollinger Band tap doesn't mean they're going up, but it just means, pay attention. Okay, there was a tap there, a tap right here, down they go. Missed them here, and notice they missed the tapping the Bollinger Band, so they didn't quite light up the upside, kind of turn lower. And again, it's not a guaranteed proven way, but it's very, very reliable. Here's a tap here, but it kind of lit up the downside, and by the time they tapped them here, all the DTBs had changed colors. So that's, even though they're flat, you've got an indication. So what would you do here? This is not a boomerang short here because the dynamic trend bands haven't crossed over or matched or anything. But here's a tap in the Bollinger Band. Here's a pullback here right after that modification rule, right? Here they are crossing over. All the taps on the sig line were used up, so what do you got? You got the modification rule to come to your rescue. Here's the crossover occurring, so within 4 to 5 candles, trade a pullback to the Cobra. Well, you didn't get one, but I'm saying you had that if they had just reverted back a little more. See that? Tapping the Cobra, or the Bollinger Band, and up they go. Tapping the Bollinger Band. I mean, you could actually go through and watch tap, pullback signal line, up they go. Tap on the Bollinger, signal line, down they go. It's amazing. That's why I use them for the system. Sometimes people ask me, well, why do you have Bollinger Band? Isn't that a different system? I go, no, it's really just additional information for reading the market. We just put them in just like you'd put in a meter. Like we have this meter here, ticks remaining. Well, that's not an indicator, it's just telling me how many ticks I got left in the chart. Bollinger Band's like that. It's like a meter or a measure, like, ooh, tapping the Bollinger Band, pull back signal line. You see that? Tapping the Bollinger Band, pull back signal line, up they go. Congested, super congested area here. So now you know what to look for. As a review, the instant color bar changes. Red dot, yellow, or red candle, yellow dot, red candle, blue dot. Sell arrow, buy arrow, red candle with a sell arrow, a yellow dot with a green candle. You just look at the candle. It's a red candle or green candle with a yellow dot, or red candle, that's fine. Then a big spike candle, then a counter spike. Oh God, forget it. All I'm going to do is wait for what? I'm going to watch for the dynamic trend bands to match and a tap on the signal line. If you want to simplify what I've said here today, at least watch for a tap on the Bollinger Band in the direction when to go to, and matching dynamic trend bands with, of course, a buy channel correspondent to that, a new arrow, and it'll increase your odds of staying out of the whipsaw. Let's take this whipsaw area here, 5 minutes after the open, which, hey, if you were listening today, you shouldn't have been trading that quick in the opening, but if you did, and you're saying, look at all this whipsaw in pre-market, well, here's a new buy channel. Here's a tap right here on the Bollinger Band, matching dynamic trend bands, a pull back the signal line, and you get a winning trade. It's amazing, huh? Look at this. new sell channel, runs right down, taps the Bollinger Band, pull back the sig line, down they go. Combine that with nice, tightly formed, smooth trade signal line, Cobra, dynamic trend band number 1, all coming together here. And you wouldn't have taken this trade till all these matched anyway, but you can see the whole thing starts when you get that tap on the Bollinger Band. And down they go. Tap on the Bollinger Band here. They run up, and now you got a market that wanted to scream higher. So everything's matching here, but this has formed a fat channel. The only thing you can do here is, once they cross over, is hope you get a pullback the Cobra, which you didn't, so you just leave it alone. But look at the counter channel. Arrow there, new buy arrow, matching DTBs, buy them here, up they go. Just wait, there's a boomerang trade around the corner. Now here and also, by the way, notice here when the new channel opened up, the second candle tapped the Bollinger Band. You see, so the matching dynamic trend bands, tapping the Bollinger Band is a real good way. Just those two things. If all this other stuff seemed like a lot to remember. Now in this case, you have a steep dynamic trend band rolling lower. Don't expect these taps to mean anything other than it's just a market trying to make a counter move. And you already know what to do, right? Because here's the counter move. There's the next sell channel. Dynamic trend bands match. Down they go. Now here's a third level trade, which we don't take those, and you can see why. This one was really fierce, and you're not going to trade them here, even though this probably panned out. 59.75 came down to 56. Just eked out 3 points, and that's just the magic of Boomerang. When those dynamic trend bands match, it's going to give you winning trades. That's the bunker method. When all else fails, get down in the bunker and apply the bunker method. Wait for the dynamic trend bands to match. Trade a pullback the sig line, not in a fat channel, but just within the context of the regular thing. Look for a Bollinger Band tap, which occurred here. Pull back the sig line, up they go. It's beautiful. They pull back, get congested, re-tap, and up they climb. Now look here. I know this is late in the day. We don't know where you trade those. Say you're going, okay, well, they're crossing over here. There's a pullback sig line, but they're not quite close enough here for the spread. Well, use the Bollinger Band. Here's a tap and a tap here. Now they're tapping the Bollinger Band. That gives you additional ammunition for taking the trade. The trend bands, the DTBs congest here, then a point and a half, and there's the signal line. You got that extra confirmation that you got a tap in the Bollinger Band, pull back sig line. So that's pretty thorough on that. The next part and the final part here is watching the higher time frames. For right now, I'll actually do a special seminar sometime on those, but I don't want people, some of our new respected guests here are brand new to Boomerang, and I start talking about the 5-minute, the 13-minute, the 30-minute chart, the 60 and the 135. Oh my God, I got to learn so much, and I got to figure out how to read all those higher time frames. Oh, forget it. It's too complex. Unnecessary. But because I'm real thorough, I use those as ways. In other words, if all those time frames are bullish and the market gets congested, it's most likely just a consolidation for a continuation higher move. Just as a simple example. And then the final thing, which, like I said, is probably a seminar in itself, and no one will want to even trade if they hear this seminar, and that is how to learn how to read the riggers. Because a lot of people, especially new traders, think, oh my God, if it's all rigged, then what's the point? You can still make a lot of money. So what if it's rigged? I mean, they're just propping the market up because they don't want it to, turn us into a third world country by just dropping down to Dow 3000 or something. So anyway, the point is that we'll talk about that some other time, or you can join my live room. I monitor the riggers every day, and I point it out when they're probably going to show up and when they're rigging something. One of the real simple ways to monitor the riggers, any time on any day in the markets that the Fed's involved in that day, watch for bullish rigging to go on. In other words, oh, it's an FOMC meeting starting today, watch for bullish rigging. If it's an FOMC announcement day, stand aside. Most likely is better because it's going to act real weird, and there's going to be all kinds of bullish spike candles coming in, rigging the markets up. It's what I call the Fed cheerleading squad. Lately, the Fed, as you heard originally a couple days ago, that was meeting with Obama. That's because the final year of the presidential term is usually bullish. They're meeting secretly with him, and he's probably begging him, make sure and keep this market propped up for my legacy, because he's going, this is the final year of the presidential term, traditionally bullish. However, they're telling him this market is ready to get roasted on the downside, most likely, temporarily. And if it's not shored up, it could be a problem going into November. And with all this election insanity, and what to speak of this Republican Cleveland convention coming into that, I mean, there's going to be a lot of stuff. You see it on the news, what's going on. I mean, there's a major shift in things. These parties are being called to honesty, and it's great, I think. These people have been putting their same old clowns in there all these years, going way back to when, pardon the understanding, but you can see all the proof back to when they killed Kennedy, and then they killed his brother Bobby. You know, it's like these people are entrenched in these things, and they don't like anybody messing with their establishment deal. So it's getting pretty intense out there right now, and I'm just saying that's in the news. But whenever you see the Fed, so the Fed's been meeting even more secretly, more with the White House, and I just heard that today from some really good sources. It's not even on mainstream news, and they're not telling anybody. So whenever you see the Fed getting involved in something, watch out for rigged markets, generally on the bullish side. Pretty soon, I think they're going to pull the rug out and let it slide back 3 to 5%. I'm expecting that could happen anytime. But we'll see. But overall, still looking for the market to remain fairly bullish coming into the end of the year. But I could keep going here, but I'd like to end this seminar here. Look at that. Tap the Bollinger Band. Up they go. It's a wonderful measure that I hope I just demonstrated to you. Follow the Boomerang rules. You know, if they're tight spread and everything's set up right on the dynamic trend bands, they're so powerful. You're going to get those trades. They're going to set up for you. But just keep an eye on those Bollinger Band what I call marching up the Bollinger Band. Look at this. Look at this ridiculously huge move here. This is Fed rigging at its prime here. Unbelievable. And again, though, look, even though it's a minor little pullback, tapping the Bollinger Band, boom, down they go. Retap up here in the Bollinger Band, pull back, up they go. They flounder in the middle, tap the Bollinger Band, walk them straight up. So go back over 10, 20 charts and incorporate that into that. It'll help you stay out of the whipsaw markets, and I think you'll do really good in avoiding that using all the things I've told you today. So I've recorded this webinar, and you'll have it for posterity when you ever want to watch it again and learn and take notes on it if you didn't get a chance to today. So thanks for joining with us.